One, and we are live. What's going on, everybody? Welcome back to ETF Tracker. Welcome back to another stream talking about all the things going on in the macro environment, geopolitics, stuff going on in the Bitcoin world, in the ETF world. We have politicians front running stuff and then getting cooked. We have VCX. We were talking about it collapsing, and it has indeed collapsed. I found a very interesting chart actually on percentage of 30-year-olds who are both married and homeowners has been going down literally every single year. Tom Lee is bullish. We have SpaceX IPO filing for an IPO officially. We have BlackRock filing to launch another iShares Bitcoin Premium Income ETF, which I thought was pretty interesting. And we have Michael Saylor pissing off quite literally the entirety of crypto Twitter and Bitcoin Twitter with his own little advertisements that he put out using AI, as he always does. It was slightly brutal to watch, but it is what it is. We've come to just get used to that, I think. If you haven't already, please take a second and repost the stream as we roll into this show. Thomas, my amazing co-host, how's it going?
Doing good, man. Yeah, lots of funny stuff this week. Lots of good stuff to talk about.
Yeah, 100%. Well, I mean, I don't know where you want to start. So, like, you sent me a couple stories. You sent me the Sailor one. There was Quantum was huge for a couple days there. It started to die down a little bit, to be honest. We had talked about VCX. I don't know. There's a lot of stuff going on. I'd love to see kind of where you want to start from, and we'll kind of go from there.
Let's start with the Sailor story, just because.
Yeah, let's do it. All right, let me pull this up.
It's so topical for our pod, I guess, and it's really funny.
It is. Should we play it? It's about 30 seconds. We'll play it.
Yeah. Play the clip for the people that haven't seen it.
Okay.
This is Sailor promoting his STRC product.
Yes, indeed. Here we go.
Are you on vacation here?
I live here. I'm retired. I just don't think I'm meant to live an uncomfortable life.
Wow. How did you make it?
I worked hard as an engineer to save money. Again. Then I put my savings into Stretch.
What is Stretch?
Stretch is a stock.
All right, man, pause it. I can't
It is brutal. It's so brutal. It was brutal. Martin Shkreli tweeted and he was like, dude, arrest this man. I was like,
yeah, that was I love that. I mean, this brings me back to last bear market where, from starting from 2022, something happened. Saylor got one-shotted by AI. It's the only explanation for this. He's the only person in the world that, like, there was a time in 2022 where AI images first became a thing, and everyone was excited about this for like 3 days, but not Michael Saylor. Michael Saylor then proceeded to become obsessed with it, and it became he just posting AI slop every day for years, except occasionally where he posts something interesting like MicroStrategy has just bought a bajillion Bitcoin. That's interesting, Michael. When they announcing you've just raised $1 billion, that's interesting. But the AI slop is not interesting. But now the slopification is getting worse because he's figuring out the videos and he's putting out the absolute trash that this video is, and it's so embarrassing. And the funny thing is, you're just trying to figure out what's going on here, because you've got all these people that are calling his products a Ponzi scheme. And then you've got all these very smart people, very sophisticated people that can explain why what he's doing is very intelligent financial engineering. It's not a Ponzi scheme. You know, he's developing these credit instruments backed by massively over-collateralized positions of $50 billion of Bitcoin. It's very interesting credit note. It's basically like a stable coin. He's developing like a money market. It's clever what he's doing. Maybe even brilliant. Maybe. But then he puts out the marketing for it that is basically marketing it like it is a Ponzi scheme anyway. So it makes anybody that wants to try and defend it just go, oh my God, Michael, what are you doing? And yeah, I mean, it's kind of indefensibly bad. So I actually, when I saw the people that were like, arrest this man, I was like, yes, yes, not for the product, but because that post is so bad, We are suspending your account, Michael. You're banned from posting.
I feel like he's
Never
rage
again.
baiting us at this point. He's got to be rage baiting us. Like, there's just no way, dude. Like, I look at this, I'm like, bro, there's just no way. Like, there's no way you posted this. It was rough, dude. I will say there's a lot of interest around STRC right now, at least in the Bitcoin world. I know we got people from all over, from the traditional finance side. We got people watching from the Bitcoin world. STRC is kind of like top of mind. I'm seeing a lot because
is actually extremely interesting because if you like abstract, make it really super simple. It's a way, if you want to bet that Bitcoin is essentially going to go sideways for a while, this is an awesome product because you can own this product and get 11.5% interest and you'll just keep getting paid that. You know, if you think Bitcoin is going to shoot up, then this product probably isn't for you because honestly, why not just own Bitcoin? And if you think Bitcoin is going to crash and burn and go to, 10K, then, probably this product is too risky because how sure can you be that MicroStrategy will be able to pay it? But if you think Bitcoin is just, it's around, it'll go sideways, maybe it goes up a little, maybe it goes down a little, but whatever, then it's like, whoa, I can get 11.5% interest on this loan. MicroStrategy have years worth of cash just sitting in the bank to pay the interest. It's not going to be, this is not going to be a problem for MicroStrategy to pay the interest payments for the next several years anyway, as long as Bitcoin doesn't nuke. So the point is that it is an interesting product, but Saylor is promoting it like a Ponzi scheme. And so all of his critics are just, the only thing you can think of is there is a certain philosophy, and I don't know that many people buy into this, but there is an idea that all kind of there's an old school, all publicity is good publicity. There's an old school idea. Yep. So it's just attract controversy, controversy creates cash. This is what we got to do. It's a really old school, I would almost say boomer mindset. And the reason why is because there was a logic to this in the 1990s because it was so hard to get attention whatsoever. Nobody was it's not like you had social media, right? You had no distribution. Yep. So even if everybody is dumping on you, it's like, hey, at least they're paying attention to me. It's kind of not necessarily that's kind of an old school idea. I think Trump wrote about this back in the day, but many people have talked about this. Yeah. However, Saylor got 5 million followers on X. He can get distribution, publicity. He doesn't have to put out absolute garbage trash that makes his product seem like a Ponzi scheme. He can actually get good publicity. He doesn't need to get this junk.
People have said that people have said for a while now, for years, I think that the Bitcoin world has a marketing problem. I tend to agree. There are some ways where it's cool, and I don't know, dude. It's rough. I don't take as much. I'm not putting as much weight on this particular one. I guess for me, I've sort of just given up. He's going to do what he's going to do. He's been able to somehow continue to raise money every single time. They were able to buy more Bitcoin. I'm pretty sure STRC bought more Bitcoin lately, yesterday or something like that. And so it's continuing to work. And I guess we'll have to see. Obviously it's completely contingent on Bitcoin. If Bitcoin ends up, going the wrong direction, it's going to be a long, long road. It's going to be worse even than the MSTR holders who've been holding since the top. So.
Yeah, well, there's one thing that is also interesting. Every month they announce their interest rate, so it's a variable interest rate loan, which is how they keep the price fixed. And this month, for the first time in a little bit, I think they kept the rate steady. So, in other words, in order to attract capital, they kept having to raise rates. That's how it's got up to 11.5% interest. And now they're going, okay, we're just holding at 11.5, which is, still really high, credit card-ish loan type rate. But at least it would have been seriously bearish if they're going, actually, we're going to raise rates again because we need to get this to 12, 13, 14. That would be pretty scary. So that's the one other interesting piece of news, that there's enough demand for their product at this level that they can keep raising capital. But yeah, no, that's probably
we'll see
my thoughts on that. Where do you want to go to next?
Yeah, so that was really interesting. I honestly can't believe it. Let's switch over here. So, slightly different topic. I believe I have it pulled up here. We have a pretty big announcement coming out that SpaceX officially launches for their IPO. We've known about this for a little while. I saw when it first came out, it was that they had officially, confidentially filed for an IPO. I'm not exactly sure what that meant, but they're out there. Everyone's knows about it. Everyone's talking about it now. It is out there. People are expecting it this year now. We'll see what ends up, what week they line it up on. It kind of depends a lot on the broader market, but I have a feeling it's going to probably do well. I mean, I think long term it's going to do very well. I have no clue how it's going to do in the short term. I haven't really watched an IPO like a hawk the way I'm probably going to watch this one. What are your thoughts on this?
Look, it's a shame because like it's an awesome business and it's an awesome company and it's an amazing thing from a, first of all, actually makes genuine money, but also like a sci-fi. It's like, this is the future. This is all really cool, all this kind of stuff. But the revenue of SpaceX is like 15 billion a year, and they're talking about a $1.5 trillion valuation, $1.75 trillion valuation for SpaceX. Yeah. So it's so completely insane and out of this world. The price you would have to pay. I mean, literally out of this world. The price you'd have to pay for SpaceX, that is stupid. The problem is like you can have the most amazing thing in the world, but when it comes to investing, like the price you pay matters. It's like it doesn't matter how frigging brilliant this rocket company is and how much this is the future. Like the point is, all the value has already been extracted. At this point, I feel like this is my take, but it's just exit liquidity for the people that, they pumped up the valuations in these private rounds because they know retail is going to be excited about it because it is cool. It's a meme stock with a $1.8 trillion valuation. That's kind of the way I look at it. I couldn't, how does this get to, how do they produce the cash flows to pay this business back? Because the thing about it is when you're buying a stock, if you're buying it with the idea that you're just going to flip it later, that's very risky, and that's how you get crushed. The way to, the old school Warren Buffett, Benjamin Graham security analysis, when you're buying a stock, you want to be thinking about it like this is a business and I'm going to own this business. So if you were to think about SpaceX, all right, I want to own SpaceX, the cash flows of this business, you'd have to go, well, hang on a second. How many years, like what's my payback period? If I'm going to pay 1.8 trillion for a company that's making $15 billion revenue, what's the profit of that? Maybe it's a few $1 billion. You're paying 500 times profit. It's so insane. The price you'd be paying for that profit that you're not going to be paid back properly unless you've got some vision in which, like, you have to have this vision in which, it's going to be a monopoly of rockets flying onto other planets, and they're going to be mining gold asteroids, and they're going to be doing all this crazy stuff out in the world, and they're going to have this great monopoly, and it's going to be the greatest company in the history of mankind, and it's going to do all this stuff. Maybe, but otherwise, you're buying it at a startup type valuation, but it's already 1.8. It's already one of the biggest companies in the world. Like it's silly, and I won't be touching it. But you might want to touch it from a. You might want to touch it from a. Hey, I think retail is going to pump this thing because it's going to be exciting and fun. So like from a. Oh yeah. This thing is going to pop. Okay, maybe it's a trade, but I don't see how anybody could realistically buy it and be like, oh yeah, I'm going to hold this for 5 years because the cash flow is going to be so good. Like, no, that's silly. And by the way, what does an IPO mean? That means they're selling. Like that. That's what this means. This means this is Elon, the SpaceX employees and all the equity holders. This is their chance to sell.
Cash out.
So they see this as a great opportunity to sell, and I would say, yeah, probably is a great opportunity to sell.
Yeah.
I don't. Then I don't like it personally. Love the company.
Yeah, I agree with
just
you.
don't buy it.
I agree with you there. I think for the most part, people are just excited to be able to get into this. They just want to be an investor, I think, in something that's quote unquote new. Like, I think that's the main appeal there. We'll see how it ends up rewarding or not rewarding people once they are in. But like I'll admit, I mean, it would be cool to be a shareholder in SpaceX. I'm not looking to get in, right? I feel like I'm definitely going to wait to see how the dust settles first. I'm definitely not hopping in and trying to ride in, pray for a 4x when we just talked about the market cap being so high. Speaking of someone who's mega bullish, we got Tom Lee here, and I remember this clip now. This is an interesting one. It's a couple minutes long. I don't know if we need to play the whole clip here. Tom Lee, obviously, people know Tom Lee's he's a perma bull, and so he gets enough shtick for it. But he does bring up some interesting points here, actually, in this clip, especially on the wars. He says every war since 1900 stocks bottom in the first 10%. There's a couple things here, so we'll see if we can get a few seconds here from this clip.
Would you buy the market today?
Yeah. I think we're 90 to 95% through the sell-off.
What gives you that confidence?
Well, I think some of it's positioning, and Goldman had a really nice piece about hedge fund positioning.
That's right.
And
certain things that looked up, sorry to interrupt you, just so people have the full context. Their note was basically like, look, we've observed a lot of hedge funds selling, which looked like capitulation activity to us. So maybe that's run its course. So now you can perhaps build that base back up.
Yeah, so I think that's one component. The second is retail sentiment's very negative because the AAII bulls less bears is minus 20. That's a tactical sign. The VIX closed above 30. And now I think earnings season is going to show earnings probably going to hold up better. And then the last piece there is I think we're just going to have to realize that stocks tend to bottom early in a wartime situation. So we've looked at every war since 1900. Stocks will bottom within the first 10% of that war. So if this is a, 2-year war, we're going to bottom pretty early into that process.
So let's hit.
All right, so he's got a couple more things there, but I think that was an interesting. I have not looked at the data on that one. Apparently, I mean, he said his team looked into it. I mean, I always wonder if people will ask him, like, "Hey, Tom, like if they make fun of him for a certain stock they thought was going up and it went down." Like, I don't know if they'll hold him to that kind of standard or if they joke around with him there. So I imagine they did the work here on that specific stat before he said that. But what are your thoughts on this video?
Yeah. So So the first one I would say is when I saw the caption, I didn't quite understand it. So when he's talking about the first 10%, he's not talking about a price. He's not saying, in the first 10. What he's saying is if a war lasts 10 months,
yep,
the stocks tend to bottom in the first month of that 10 months. That, that's an interesting observation. He's got some correlations there. Interesting. I almost feel bad. Like I'm almost judging myself right now because I actually kind of agree with Tom. I'm like everything you're saying. Oh boy, everything you're saying is making sense to me, and that makes me go, "Oh shit."
That's why I pulled this clip. It was an interesting one, right?
Yeah. Because normally I think this guy's kind of a joker, but actually, I kind of suspect he might be onto something here. It's tough. It's so tough as well. I mean, we haven't really talked about the war stuff yet, but we can't. There's still so much uncertainty here that it's like, he wants to talk about hedge funds positions or retail sentiment or whatever, and it's like, yeah, okay, that stuff is all good, but if Iran and the Houthis team up to take over the Red Sea, none of that's going to matter when they blockade all the oil. And I'm not saying it's going to happen, right? But what I'm saying is that you can be looking at these factors over here, and oh yeah, this looks positive. This looks positive. Meanwhile, it's got nothing to do with on the ground what's going to happen. It's a very tricky. Well, actually, this is a good lead in, because what I was going to say is that it's extremely difficult to predict market price action on the basis of a war. And maybe the best example of this, let's let's look at what happened this week, where the Financial Times announced this week about Pete Hegseth and his, insider trading in the lead up to this war. You find it, but I'll summarize it because I know the story. So basically, Pete loaded up on Pete. Obviously, he knew this war was coming, so he's got his broker to load up in his account in like military stocks, defense stocks. So he's contacted broker at Morgan Stanley, contacted BlackRock, and essentially invest in his chosen piece with the information that he has is, I'm going to invest in the defense industrials active ETF. Makes sense, right? Going to war, going to invest in military stocks. All sounds good. Problem for Pete is after the war started, the stocks tanked. So even with insider information, even trading on insider information, Pete's massively underperformed the market here. And, falling almost 13% in a month, right? And so
brutal.
That is brutal, but it also tells you, like, it's hard to, first of all, what does that tell you about what they understand about is happening? That's a question right there, and maybe an even more important question than this stock stuff.
Yeah.
But more importantly, well, at least for our discussion, what are we supposed to take from this? It's like, you don't, first order thinking, we got war, military number go up. Well, what about the fact that oil prices and inflation is higher, and you're going to have higher interest rates, and you're going to have correlating factors with other variables in the market and stocks and equities, and these are businesses, and these costs are rising, and these businesses are under pressure, and there's going to be, when you have big negative events, correlations tend to go towards one. When you have, in normal times, you tend to see this dispersion amongst different segments of the market in a diversification of the portfolio, where you've got, this thing goes up, this thing goes down, this thing does this, and then you might have a broad market index that will go one way or the other. But when things get hot, when things get dumpy, you have this situation in which correlations tend to rise. And so everything just started nuking, whether it was AI, whether it was tech, and in this case, the defense stock started nuking as well. And Mr. Insider Trader, Pete Hegseth, well, it's legal for him to do it too, which is the hilarious thing. But even with all the inside information, it's costing him money. So my point is, we bring this up, Tom Lee has kind of, he's got some like valid points about retail. Retail is generally negative right now, which can be a kind of a counter signal here. You got hedge funds that have perhaps already sold, which means they've got dry powder, which means they might come back into the market to buy. These narratives or signals, if you'd like, make sense. But we just don't know what's going to happen with the war, and it's really hard to predict. And even when you have inside information, you can still screw it up. So I think that's probably the moral of that story.
We talked about that on a recent stream. I forget if it was with you or all the space and streams are starting to blend together, but they were talking about, like, it is choppy market. Like, for people who are trading on the fundamentals, it's a tough game out there. Like, for the TA guys, if they're paying attention to key levels, if you're just like, hey, there's a ton of liquidity here, you can maybe make an estimated bet there and just have like a tight stop loss. But if you're looking to just trade off some news where you're like, oh, well, this guy's about to invade, so obviously I'm going to long this. It's like, well, you actually don't know how that stock's going to perform. You might get everything you want, and it still might go the opposite direction against you. I mean, like for example, and we can come back to this, but I do want to spend a second on here. And this is also shout out to Rex Shares for this in a second, but like Circle and a few other stocks related to like the stable coins were prepping. Basically, it seemed like, at least, people were like, oh my god, we're going to get all this clarity around the Clarity Act, and then last week get this bombshell about, hey, actually you're not getting the yield that you want. And there we go. Circle takes a dive, down 5%, literally just today, down 12% in the last week. Right. And it's just a completely opposite direction. Everyone thought that was like, oh, this is it. Like, this is it. This is finally when we get clarity, and it goes against them. Also, for those who are looking to trade, big shout out to RexShares for sponsoring today's show, but all sorts of opportunities in the ETF world, just in general, if you're looking to trade these markets, if you are that good, if you're that guy. Here's an example of a 2x inverse circle ETF. So, obviously, I showed you a second ago, Circle in the last day was down 5%. So on a 2x levered inverse, it's up 10% in the last day, performing very well in the last week, up 26%. There's all sorts of cool opportunities out there in these markets. And so definitely, check out this one. I think this one's CRCD ticker. I'm going to have a link down below the stream. So it'll be in the tweet below the stream for those who are interested. If you guys want to check out, they've got all sorts of different ETFs, not just these single stock levered ETFs. They've got all sorts of cool ones. Big shout out to RexShares for sponsoring the show. I do want to make sure I fit this in. If you're an investor, definitely just carefully consider any time with a fund's investment objective, risks, charges, and expenses before you do any kind of investing. The fund's prospectus and summary prospectus contains this and other info about RexShares. And like I said, if you want to obtain that prospectus and summary prospectus, just visit their website at rexshares.com. These should definitely be read before you do any kind of investing. We're super excited to be working with RexShares, of course, one of our longest running clients. But yeah, man, like I said, it's really hard to trade these markets on the fundamentals. Apparently the guy is out here completely just illegally trading, and he's still getting cooked. It's like, bro, how these markets are tough. These markets are tough.
Yeah, well, in this case for Pete, funnily enough, it is. I think it actually is legal. It's like this is the Nancy Pelosi.
Oh yeah, right.
Effect thing, right? Where the laws for I don't know exactly the details, but essentially the laws for citizens and the laws for people in government for some reason are not married up. So if you did this in the private sector, bam, straight to jail, insider trading. But whatever reason, when you get inside information in the government, oh yeah, you can trade on that, make a buck. Or in this case, lose a buck if you're Pete.
Seriously.
So, but it makes for a great story. The Circle one is interesting as well. I would, it's amazing how often you need to like counter trade if you want to try and it's like counter trading narratives in the sense of it's like it's just so eerie how often it happens that everybody thinks it's going to do this, so it goes this, and then it's also that old saying of like, buy the rumor, sell the news. This is how often does that play out, right?
Exactly.
Like Circle gets a pump and like the rumor, get this act, the clarity act, boom, it happens and it dumps. A bit of a tangent, but for me, the all time that like stays with me of the buy the rumor, sell the news was 2021, and that was like the peak crazy, like that was like peak financial markets. Nothing was more like the most exciting thing you could be doing, especially during COVID, was being on Twitter at the time and following the financial markets because everything was crazy. But during that period of time, was all the rumors that Elon Musk was going to go on Saturday Night Live and promote Doge.
Yep.
And in the week leading up to it, Doge pumped like you wouldn't believe. It was like every day pump, and it was like just when you think it can't possibly go up anymore, it goes up, or it just kept going. And then the moment he hit the very moment like he gets on television to start, like he does the bit where he's like, yeah, I'm actually promoting Doge, and he actually says it on, he says it on live television. It nuked from there, and it's never touched that high ever again, and I would bet it never does either. But like it's just a classic trap. Buy the rumor, sell the news. I've seen it so many times. Of course, the corollary to that, or the exception that proves the rule, perhaps, is when the rumor is about buying or buying power coming into the asset. For example, a lot of people tried to use that idea on the Bitcoin ETFs, the buy the rumor, sell the news of Bitcoin ETFs. And that was dumb. And the reason why was because, there was a buying up of the rumor of the Bitcoin ETFs. But the news of the Bitcoin ETFs, okay, maybe you want to be a genius trader and trade the second that they announce the Bitcoin ETFs have been, and it happened, fine, whatever. But if you zoom out for a minute, what's the actual news there? The actual news is massive capital flowing into Bitcoin. So you can't, you don't want to sell that, you're not going to sell the news on if you hear the news say someone is about to buy $50 billion worth of Bitcoin, that's not the time to sell the news. So you have to use a little bit of nuance and maybe logic when it comes to these kind of trading rules. Every situation is different, but
Agreed.
it's entertaining. It's interesting to watch. This Clarity Act stuff was interesting. Circle dumping in response, very interesting. It's cool that you kind of get this kind of democratizing of finance. Shout out to Rex for enabling this kind of trading as well.
Yeah, 100%. And speaking of people out here building out in the crypto world, with BlackRock putting out another ETF, filing to launch iShares Bitcoin Premium Income ETF BITA. Fund holds Bitcoin and sells covered call options on IBIT to generate monthly premium income. So interesting, dude. This is interesting. Bitcoin. I mean, dude, BlackRock is very much in the game right now for Bitcoin. Tell you what.
Yeah, that is interesting. We've talked about this as before. This is can you create a yield on Bitcoin?
Exactly.
This is the alchemy that people have been trying to generate for forever. Interesting. I mean, I would love to know what kind of. It's hard because for this kind of thing, you need a lot more information about the track record and this sort of thing. Because, for example, how are they selling way out of the money options? Are they selling what's the strikes, all this kind of stuff? So it's basically what's the target yield here, and what's the because you can have a long spot sell call options type of strategy where you still get most of the upside if it goes up, or you might be selling all of the upside. It's we just don't have enough information here to really know what this product is. We get the idea, but I don't really know what I'd be buying here. I mean, for me, I'm totally curious about this, but this is exactly one of those things where I want to see the performance of it over time, and I think, and I'm really confident financial advisors will think that way too. So it's this is a long game for them, because BlackRock are Bitcoin's gonna be around forever, right? So they put this product out there now because in the 2030s this might be a killer product for them. It's the kind of thing that you put it out there, you build a track record, you get performance, and then you can eventually really start to sell it to advisors, institutions, and all this kind of stuff. It's you'll have early adopters that'll be I'll try this, but it's I don't.
Well, a lot of the asset managers, even Jerome himself, they've all talked recently even about they're all well aware. They're dude, we have a problem right now. They're we got an issue that's slightly unsolvable. In quotes, slightly, it's an unsolvable solution or a problem here. And Larry Fink has put it very well. I think a lot of people hate the guy. People have their personal thoughts on him, but I think he's very realistic in the way he's look, we're going to launch all these things because whether you like it or not, we are cooked. The debt is out of control. The government's not going to. There's just no way out of this. So all you can do is just make sure you got some diversification in the anti-monies, right? That's why gold had a little bit of a run up probably. There's certain assets you can buy that just are slightly outside of the system. They're not exactly tied to the stock market. They all will probably move together, which is true, right? If the stock market collapses tomorrow, there's a very high likelihood Bitcoin is finished for a while too. But you're hey, look, the situation is that the currency is being debased and everyone knows it. Even the asset managers in the Fed, everyone knows it. So they're okay. In the meantime, while this thing is a slow bleed to the death, there are other assets out there. It's not worth full porting probably, but it's worth having some products out there and making sure our investors are aware. So for the next 5-10 years, we can start to shift a 1% allocation, 10% allocation, something like that.
Larry's been orange pilled. There's no doubt about that.
Oh, absolutely.
And you know, part of it as well is he's doing the Sailor thing, which is going like, let's see what products get product market fit. He doesn't know. Nobody knows until you launch it. You know, it's like with MicroStrategy, they launched like six different preferred stock type arrangements until they found this STRC that was like, the thing that's really garnered attraction and attention and product market fit. So I think Larry's, you know, we'll launch this, we'll see what happens. You know, they might
totally.
can this if nobody buys it, but they might.
I mean, they just dropped an ETH one. They just dropped ETH B, I think it was, and so they're playing around. They're willing to see what's going to work. I agree with you. I think they're very long term about this.
See what the market wants to do. Yeah,
agreed.
No, I mean, good for them.
Yeah, totally, 100%. Let's move on. This is an interesting chart I saw. This was shared by my boy Darkside. And they, to be fair, they talk a good deal on things that are going wrong, just in general in the country, things that could use some shoring up on. It's an interesting chart here. You know, estimated percentage of 30-year-olds who are both married and homeowners, interest in performance just dropping off like a freaking rock, like just off a cliff. I mean, it doesn't even look a little bit like people are trying / even want to try for this. I mean, it's literally just a straight down chart, not even a single retest of like trying to make like a higher low, just continuous lower lows, lower highs, like a brutal chart, dude, just straight down since 1950. And we're down at the dead bottom now. I mean, good Lord.
Yeah, it's extremely interesting, right? And I mean, the thing is that you sort of wonder, well, first of all, where is it going straight to zero? I mean,
I was gonna say, where's the low? Can this thing drop another 100%? Like how low can this thing go?
It's also, I mean, not that it's in the chart, but obviously akin to this kind of post or this kind of story is, of course, the birth rates. So people aren't owning a home. They aren't married, and they're also not having kids. Not to the same extent, and obviously it's a reflection of something going, you know, not quite right. I would suspect. I mean, well, look, I mean, I think that, you know, it's the homeowner one is pretty obvious, right? Housing prices are just absolutely skyrocketed. I mean, and certainly in, you know, I live in Australia. Like, houses are 10x since I was a kid. So, but incomes have not 10x. Incomes of, you know, like incomes are probably in nominal terms like 50% higher than they were 20 years ago. In nominal terms, no, 30 years ago, but at the same time, housing is massively, you know, so young people can't afford homes. It's going to be, of course, there's so many different factors here, you know, because the boomers also have, you could show a different chart which tells a similar story, which is like the percentage of the world's wealth across generations, right? Like the boomers have vast majority of the world's wealth. Of course, unless, you know, the Brian Johnson types figure it out, realistically, you know, the boomers will die, and that wealth is going to be passed down to lower generations as well. So there's a weird inheritance factor that's going to happen here. It's not like, you know, it doesn't look great though when you look at the chart. It's pretty
rough.
It's rough. Also, to be fair, I will say this, which, you know, isn't the maybe the more white pilling, the more positive side of this as well is when I look at my personal situation. You know, I am married. I'm not a homeowner. Just like many of I have many friends, you know, in my age bracket, sort of mid-30s, similar situation, but it's frankly choice. And the reason why is because putting our money into a house at these massively inflated prices, which we live in right now, doesn't make any sense at all. As much,
right?
You know, we can't have we on this podcast we celebrate the fact that, for example, the amount of ETFs out there. There's a million different options to invest today that wasn't around. 30 years ago, 40 years ago, what were you going to do with your money? Even the stock index was barely invented. So what did people do? They put their money in. They had all of their money in a house. Whereas today, like for me personally, and I know a lot of people feel this way, at least where I live, like, yes, I would like to own a home theoretically, but at the same time, it makes so much more sense for me to invest my money in rent, financially speaking. And it's like, this is the situation, if housing prices were a lot lower, I would go, yes, it's attractive. But the reality is that it's impossible. I believe it's impossible for housing to have the same kind of returns going forward that it had in the past, simply because, I'll give you an example, right? In the streets, in the general suburb that I grew up in the 1990s, this is in Australian dollars, but a house might go for $300,000. Now it'd go for $3-4 million. That's what's happened.
Yep.
But that over 30 years. But the point is, those houses are not going to sell for $30 or $40 million in 30 years' time. Like, those returns are not going to happen again. There's simply no way, not unless we have some kind of hyperinflation. But if that is the case, then Bitcoin will be trading at $20 million a coin anyway.
Yeah.
So
True.
Unless we the real returns will not happen again. They've been bagged by essentially you're buying your boomers bags if you're buying your houses now. Now the tricky that's what's happened. That's what it is right now.
I've never heard it feel like that.
But that's what it is. Now the tricky thing is that people buy a house for two different reasons, right? Because one is like, I want the convenience of owning my own home. I don't want a landlord. I want to be able to, if I want to smash down a wall, or I don't want to be at risk of being evicted, all this kind of stuff makes it much more I want to own my own home. But the reality is, from a financial perspective, it's a lot more questionable. So it's like, do you want to own a home because it's this awesome financial asset, or do you want to own a home because you want a roof over your head that you own? And they're two. Yeah. One is like the utility of a good, and one is a financial asset. And I think the problem is that it's been this muddying of the waters where it's both things has created this mess where it's been an insanely good financial asset for a very long time period. Now it's potentially a bad financial asset. Potentially. That's a prediction that I would make, but I don't know. I can't see the future either. But it doesn't look particularly attractive. But then you go, well, I still want the good. I still want the utility thing, right? Like, I still want to have a house, but I don't want to buy your bags.
Exactly. And I think the fact that it wasn't a financial incentive was a huge. It's like, I don't know, dude. I can't really think of another example. We almost don't even need another example. Like the fact that you buy a home, yes, you get all the things that you get with having a home. Yeah, sure, you can do whatever you want with the yard. You can more or less do what you want. But it's basically just trade-offs. It's not that. How important is it that you can knock that wall down if you really, really need to make that happen, kind of thing, versus if you just start renting somewhere longer term and the landlord's pretty chill for the most part. You don't really see them very often. They handle a lot of the nonsense parts. It's trade-offs, dude. And at every single income level, it's going to change a little bit. But I think it's a huge factor. I'm not sure how important the utility side is if it's a terrible financial decision. I think that's probably why. This chart makes perfect sense when you think about it like that. You're like, of course, it's weird because it's like, who's really in charge of running this ship in that they want people to not, I forget, I think it was on a stream with Robert Infra and Joseph, and we were talking about the real estate market and housing, and he was like, until the incentives are such that people want to sell and are benefited in a good way, and people who buy are benefited in a good way, it will just never change. It will just continue getting worse. He's like, because it just won't make sense for anybody. You won't want to sell. You don't want to get rid of the asset. It's still it's still a home. You still bought it for way cheaper than it is now, but it might go up. And then the buyers are sitting here going, dude, I'm not buying this dang thing. Like you just said, I don't want to buy your bags and then be stuck with this freaking house thing. And it's just a money pit. And now you've got $100,000 of my dollars. I'm paying a mortgage on it and can't use that money to invest into Bitcoin or gold or stocks or anything. Get stuck in this situation where it's just a descending chart forever. I mean, I don't know what would need to change. A lot of things would need to change for this chart to reverse, to be honest.
Well, there's the financial aspect, which is the housing. And then the second thing, I guess, that's interesting here is the marriage thing, which is a cultural outcome. I don't know. It's hard for me to see what would reverse that trend. It's actually extremely. I don't see it happening. I mean, it's a very tricky thing because we as humans we have this problem where women their ability to have kids, it's basically starts at call it 14 and ends at call it 40. And the problem is that biologically speaking, it makes perfect sense. Like, have your best time is like at 18, but you're not emotionally, financially, you're not ready in any respect. You're not responsible enough. You don't have the economic means to do it. You don't even want to do it most of the time. Like they don't want to do it. They want to have, go to college and party and have fun, and so, and like, it's not, nobody's done anything wrong in the sense of it's all perfectly like it's understandable why this is, but it means that I know, of all the people, like most people go, I'm not even thinking about kids until I'm in my 30s. Like that's like the most standard thing that at least that I see in my generation amongst a wider friendship group. And so you just have this situation where it just gets pushed further and further out, partly because you're not economically ready, and partly because the cultural thing is it's like, the 20s is my time for travel, it's my time for fun, it's my time for adventure. But we are coming up against this like harsh reality thing where your biology doesn't care about any of that, right? So
it seems like it.
Like the ideal time for people is like, let's wait till I'm like 37, and the biology is like, you might have already missed the boat there. So that's an extremely tricky thing, and I think that's why we've got this birth rate issue as well. So like there was actually an extremely interesting article. Someone wrote a Substack piece about this recently. It is in the fringes of X. You get some anons talking about this issue, but it's tricky, and I don't think anybody in government really has a plan for addressing it. You do see Elon talking about it though, which is interesting, but it's not really a political issue. Not really, not yet anyway.
I'm not sure. I'm not sure what where this conversation goes in terms of, especially of the housing stuff. I don't know what needs to change here exactly, but we had a couple other things. Actually, one of the things I wanted to get your thoughts on was VCX. We actually talked about VCX in the stream last week, and you're talking about what kind of, well, I guess I'll let you summarize kind of what we were talking about there towards the end of the stream, and here's the performance.
Didn't watch the stream last week and aren't familiar with this story. What this is interesting was it just shows you the hype, like the AI. I mean, maybe zoom out for a month, maybe look at a month, and you see you see what happens. So this is basically a way to get exposure to the AI narrative. So it's a private market fund that has essentially, they own some stock of some OpenAI, they got some SpaceX, they got some Anthropic, some cool, like some really exciting companies. But the NAV on this stock, like the actual amount of stocks they own, if you put that on the net asset value, it's maybe worth $30. But the damn thing traded up to $500. This fund did on a closed market. So it was trading like 20 times its net assets. And so it was a classic case of a bubble. And it was so obvious. I mean, anybody that watched the stream last week, we were literally talking about how this is going to pop very soon and drop. Yeah. And the funny thing is, it's dropped 80%, and it has another 80% to go. So it's down from 500 to 115, but the net assets are at it's like $30. So you hold this thing, you know. And if we learn anything from MicroStrategy, it's that over time, eventually, these funds find their way to being trading at roughly in equilibrium, close to their net assets. And so you might see their net assets appreciate a little bit because, you know, these are some hot stocks: Anthropic, SpaceX, it's going to IPO soon, OpenAI. But it owns $30 worth of stock and it's trading at 115. It's going to crash, pretty much guaranteed. Unfortunately, you can't short it. There's no way to short it, which is really unfortunate.
Someone will find a way. I know it. On some fringe, weird liquidity pool.
But we called it last week. We were like, yeah, this is going to drop 85%. And then like the next day it did. It was maybe the most obvious thing you could see in the markets. It just shows you the froth. It's a funny story. So I'm glad we brought it up just to, like, you know, for the people that didn't really follow through on it. You can see, yeah, it did. It dropped. It pumped 5x and dropped 80% within a few days. But it's got it's going to drop another 70%, pretty much for sure. So
this is just wild. We had brought it up like I think it was towards the end of the stream, just for a few minutes, and then the next day we were talking about in one of the trading spaces. They're like, "Man, did you guys see that collapse at BCX?" And I was like, "Oh, wait."
I will say that. Look, there is a small chance when you look at these things. There is a small chance you get an echo bubble. Sometimes it plays out that way. You have the bubble, the pop, and then another bubble before the pop. You know, classic example of this would be GameStop 2021. If you go look at what happened in January, February, around that era, it had it spiked up massively, crashed, and then it did have that second pop. That's actually really common. So it is possible. What we're witnessing here is the collapse of a bubble, but it is possible you do get a second bubble. But I'll tell you what, I wouldn't, like, there's no way I would be buying this stock to try and on the hopes of a second bubble, because
I'm not catching this knife.
But no, I'm guessing that my guess is that this has still got another 70% way to go.
Yeah, you gotta, unless you're an elite trader, you gotta read the room a little bit and know you gotta know what you're doing if you're gonna play these games. I fully agreed. Couple more stories here before we sign off that I thought were pretty interesting. One of the ones, you know, this was I'm not sure what to think about this because it comes up every few months, I guess, and like everyone literally freaks out and panics for like a couple of days, and then it pretty much goes completely nowhere every single time. I know eventually there will be a breakthrough, and I forget who I was talking to the other day on a space, and they're like, "Look, dude, at some point, break something, then we'll talk. You know, but like break something first, and then see if it, you know, hack Satoshi's wallet or do something." And there's all sorts of people going back and forth on, you know, the legitimacy of this findings. People talking about, you know, that this is really the time, you know, where crypto is going to, their wallets are cooked, and especially the Bitcoin shot 256 might be cooked. Like everyone's talking about these things. You got the Bitcoiners who are coming to the defensive lines and they're saying this is all nonsense because they've seen this story 1,000 times. But tech is getting better. At some point, it will be a problem. My hunch is that like it will be a problem for a lot of people and a lot of different banks and all sorts of stuff. But Bitcoin is in a weird position being decentralized. Like I feel like it's a disadvantage almost because of that sometimes. Like you look at a centralized banking system, they have to be preparing for this. And it'll be a lot easier for them to flip a switch, I think, than it would be for Bitcoin and every Bitcoiner to worry about their node and like get old wallets that we don't even know if people have control for them anymore. Like those are probably cooked. And so I don't know. What are your thoughts on this?
Yeah, there's a lot to this story. So this is Google's released this paper, and they're essentially saying it's going to be 20 times easier than they previously thought. The amount of qubits which is a measurement of the quantum computing to crack the like elliptical curve, the security encryption used in Bitcoin. There's so many different factors here because, as on the one hand, okay, let's go through this logically speaking. Google, pretty high credibility. On the other hand, when you look at the co-authors of this paper, one of them, for example, is Justin Drake, who is a long time, like Ethereum Foundation.
Yep.
He's basically fighting Bitcoin, and it's essentially one of the morals of this story supposedly is how actually proof of work is bad and Ethereum is good.
Yeah.
Like, okay. So there's an.
It's hard to have credibility after seeing that.
Yeah. There's a credibility problem. On the one hand, you've got the Google brand, pretty high credibility. On the other hand, you have some other people pretty low credibility.
Yeah.
Okay, so we can review it from the credibility lens. You can look at it from a market perspective. While it sounds like a big story, the reality is the market didn't move as a consequence of it. So it was either priced in or it's a nothing burger. And the one thing I will say, I haven't seen anybody else mention this, but like if you step back for a second, quantum stocks are all down like 75% over the last 6 months. So if we're really about to get this quantum breakthrough, why is the market dumping those quantum stocks? Like, that's interesting. That tells you the market isn't necessarily buying it. You know, I do think, though, to your point, the reason why people keep bringing up Bitcoin is because, first of all, Satoshi's got a wallet of a million coins. We're talking about like basically at today's price, like $70 billion worth of Bitcoin.
Yeah,
that's the prize there if you crack it. And the one thing we see with Bitcoin as opposed to these other things, it's like the issue isn't just a technology problem, it's a governance problem. You know, you have to come up with the solution, which, by the way, I'm not going to be coming up with the solution. I hope there's some smart people working on this, but somebody needs to, you know, people talk about, this post-quantum cryptography thing. I'm hoping that they'll be able to figure that out. That's a bit of a hope and a prayer, but then I guess this all is. But I will say, even if you come up with the post-quantum solution, we still need to implement it. And there's a whole governance issue with Bitcoin, which is it's a decentralized thing. People should have the incentive to be willing to make the updates, but it's still going to be a problem. The solutions that people come up with, like, freezing old coins or this sort of thing, or like if you move it to a post-quantum address, but you can't move Satoshi's, Cade, you can move your private keys, or BlackRock can move their private keys, but that's if you're a holder, you can do that. But the reality is that if you're like a Satoshi and you've been maybe dead for 10, 15 years, then you're not moving your coins. So those things are going to sit there as like a prize to be cracked. Yeah. And so we don't know, like, I guess that's where the FUD comes in. It's like, is this going to happen in the future? It's like the sort of Damocles hanging over Bitcoiners at the moment. It's really a painful one, because unfortunately it's really hard to kind of disprove. You can't it's trying to prove a negative.
Exactly.
How do you get rid of this quantum FUD? It's extremely difficult, because even if this is a nothing burger and they can't, and by the way, what they're saying is, we think this might be, we just think it might be in the next, 3-4 years. Like, I think they moved it up to being maybe 2029. So it's not like it's coming tomorrow anyway. But the point is, the real problem for Bitcoin is just that with all these stories coming out, it quells people's interest in investing in it. Like, the problem isn't that quantum's going to crack Satoshi's coins next month. The problem is that if you're holding Bitcoin, you want somebody to buy you want people up the price. And the reality is that the institutions are looking at that, and they're going, at least in the last year, they're going, I might hold the gold. Yeah. Because I'm worried that there's going to be some unknowns that come with Bitcoin. And that's a concern. So I think that's the bigger issue here. I do think it's probably just FUD. Of course, it's pretty, not a quantum expert. That's just my gut feeling here. But the problem is that it could be a very real issue just because nobody else is a quantum expert either, by the way.
Yeah.
That's the problem, right? Like, we're all laughing about the silliest thing about this is that we're all talking about it and nobody knows. Even the people that are pretending to be like, oh, I've really done my research on this. Like,
I think that's why there's, exactly. That's so true.
There's like 10 people in the world that could have an actual opinion about this, like seriously have an opinion. And the rest of us are going, well, I read this other thing.
Yeah.
This guy said this, like.
Yeah, I was going to say, even the researchers are like, I'm not exactly sure. I'm like, okay, if you don't know, then like, we're probably not right over the horizon if that's the case. Because none of you guys know. I mean, even with the AI stuff, like half of them can't decide whether or not they like the AI or not. They're like, yeah, this thing's sentient, like they're gonna have consciousness in 2 years. We're all cooked, like run for your lives. We got some guys on that aisle who've been around the AI world for 20 years already, just building in that sector of tech. And then we got guys who are not worried about it at all. We got people right in the middle. Like this is all but decided yet still. And just in general in tech, like the tech is moving fast. NVIDIA, is putting out insane projections. Literally every time I see that guy on a new stage, he's got a new number. OpenAI just ran another investing round, and they're close to like $800 billion valuation. I think last I checked.
It's Eddie Post. Yeah.
I mean, dude, they are. I mean, we're in a very uncharted territory right now. For I can see why people are so nervous to throw their money into stocks. Like if you've got like Robert Infra talks about, he's like, look, you can invest and you can be buying assets. He goes, but you should be thinking about a cash position in case we, in case we just. You're going to want some cash. And so I'm kind of in that boat too. I'm not sure what to do. And so I'm like, it's a safe answer. We'll pay our taxes, unfortunately, and then hunker down a little bit here and make sure there's some dry powder just in case. There's all sorts of things going on geopolitically as well. Like I don't know what's going to happen. But the quantum thing, dude, I was a torn of the quantum. It's just so random because it comes up every few months. It always seems like it's some coordinated effort. And then like some random privacy token pops. So I'm like, okay. What the hell? It's like what is this? Like I can't tell if it's like a VC pump or something. And so I don't know. I'm not sure what to think.
That's a very good call. And if we see any of these guys release, I've got the solution with my
exactly.
token. All right,
my token. Yeah. Not literally.
None of you better be launching any coin. Otherwise we're calling it. Otherwise we're calling it.
I'm telling you, man. It's hard to trust anyone out here these days. All you can do is just do your own research, try and come to your conclusions, try and nail down like some true things. Like there's some currency debasement. It's probably good to have some gold. Probably good to have some metals, some commodities, some Bitcoin. It probably makes sense. It also probably makes sense, even if you hate the stock market, to get some of the stocks. It probably makes sense to hold cash. So, I don't know. For me, it's like figure out what are the truths out there. And then, honestly, from there, like we spent a lot of time on these markets trying to find like the next, the next NVIDIA kind of thing. But for 99% of people, like just not buying stupid ETFs and buying ones that have buying a few that have some tech, buying a few that have some like Berkshire Hathaway type, where it's like, hey, these are some good companies that are building and they're maybe a bit more boring kind of thing. Like it probably makes sense to do that for most people. After all the research we do. I find myself just throwing my hands up and I'm like, I feel like I just gotta, you kind of get a piece of everything and just bet on humanity almost. As long as you're an investor, I say this like every stream, like as long as you're an investor, you want to have that mindset, you'll probably be okay because an investor is able to think about tomorrow and you have to just be, you have to be like you have to be in the game. You know what I mean? Like you have the ante in, you gotta like put your $2 in like for the next round, like you got to stay in the game. And so that's really just my main thing is like, I don't want to get, pulled out in the tide. I want to sit, make sure I'm on my board. So, anyways, that's really it for me. Thomas, I don't know if you have any last thoughts or any last stories you want to throw in there before we sign off, but it's been a great stream. Like for people who are enjoying it, if you haven't already, please take a second, repost it and follow Thomas as well. Follow Etfs Tracker if you're watching this here, if you're on YouTube, subscribe. But yeah, Thomas, I'll throw the final words over to you.
Yeah, man, no, good chats, good fun. Yeah, please do like, follow, send us a DM if you're enjoying the pod, something like that. Something you want us to talk about, happy to hear it as well. And yeah, no, otherwise good chats, man. Appreciate it. I'm looking forward to next week as well.
Oh yeah, dude. Oh yeah, it's always great chatting with you and keeping up with these markets. And for everyone back at home, thank you all so much for tuning in. Hopefully you guys enjoy these streams. Have some content coming at you, whether it's entertainment or if it's education. Definitely be sure to follow along. There's spaces and streams every single day coming out from the whole ecosystem. Whether you're watching from Wolf Bitcoin, if you're watching ETF Tracker, wherever you're seeing, if you're coming from Thomas's side, what's going on. Good to see all the Aussies coming through as well, hopefully. And we'll see you guys all in the next stream.